gold has just had its single best day ever on the upside. As of the time of recording, it stands just over the $1,600 an ounce level, while somewhat shy of the all-time record high of 1921 back in 2011. Ross Norman joins us now from metalsdaily.com. Ross, it's good to talk to you on this day when we've seen increased appetite for the price of gold. What's going on in the market at the moment?
Well, we live in epic times, not only in relation to our well-being, but also in terms of gold price action. Looking at the screen, you'll see a bid-offer spread out there of $1 and $2, but actually dealers are reporting trades in the interbank market as wide as $20, $30 bid-offer spread, indicating to us that the market has become highly liquid. And you might even consider the current gold price a good indication rather than a firm price, bearing in mind epic events that are going on the supply side and on the demand side.
I'll take a look at the supply and demand equation in just a minute, but I'd like to press you further on where we are in terms of this price movement at the moment. In your experience as having been in the gold market for so many years, have you seen this sort of event before in terms of the large widening of the spread?
Well, price action typically is a J-curve or hockey stick shaped move, gold weakening before strengthening. And it was always open to question whether we'd see that long shaft, that long rise in the price that typically follows a strong correction in the gold price. Now, gold was trading up at $1,700 an ounce only earlier this month, the very beginning of this month, but currently, as you say, $90 below that level. We've seen a good, strong sell-off. But today we're now starting to see some very, very good buying. So gold's really performing much as it's done back in 2000, for example, when we had a strong initial sell-off where investors were looking concerned about margin calls on equities, selling a very highly liquid and profitable position in gold to pay those margin calls on other loss-making areas before reverting to gold. So far, gold's performing to type.
Okay, let's return to the point about the supply and demand dynamic. We know with the event risk that we've got on at the moment with coronavirus, what is your observation, first of all, on the demand side for gold? Because to my somewhat amateur view of where we are at the moment, I'm surprised that gold hasn't continued to trade well above that 1,700 level, bearing in mind the risk that we have with the coronavirus.
Well, for a price to be valid, any given price to be valid, you typically have a huge amount of weight on the bid and the offer. People looking to buy and sell, and they jostle. And a bit like a compass, it swings through a narrow arc as buyers meet sellers. And the ultimate direction of that compass indicates the weight of buyers and sellers. It's the optimal point. At the moment, gold price volatility is at the highest since 2008. The compass is swinging through a very wide arc. In other words, the gold price isn't entirely sure where the buyers and the sellers are. Why is that? Well, around the world, almost every major gold refinery that you can name, including today the world's largest, the Rand refinery, announced that they're closing for 1 month. The leading Swiss refineries are all closed. Major mints are closed. To that extent, there is a major supply issue here coming through. On the other side, on the demand side, investors who want to buy gold have got a major issue because every major online website will tell you out of stock, out of stock. You can place an order subject to delivery some months hence. So the demand side is broken and the supply side is broken. And so that price discovery mechanism that we normally look to for certainty about what is the gold price is today, I would regard as a good indication rather than a high level of certainty, because there is unmet demand that people cannot buy gold. Grant you, they can buy the ETF, but you cannot go down to your local store and buy yourself a kilo bar for love nor money. Equally, the interbank market is unable to cater for supplying those institutions. So the entire supply chain at the moment is going through an entirely unique moment in time when it is not operating as it should do. The benchmark price, what we used to call the London fix, on the other hand, will give you a good objective indication of where buyers and sellers meet. But however, when every major bullion shop in the West shuttered at this moment in time, you could argue that there's a significant amount of unmet demand and therefore the price should be higher. Equally, producers cannot get their metal to market either. So we're talking about a market which is an approximation rather than certainty.
The other side of the point I want to talk to you about is what's happening with central banks with this unprecedented easing. We've seen an enormous amount of stimulus coming through. There's a lot of governments around the world willing to throw money at this problem, which is now turning very much into an economic problem, not just one that was based on the medical sector. The argument that gold is a currency of last resort. To what degree do you think that Bitcoin has taken away some of that appeal of gold away? I mean, cryptos are, of course, independent of the currency markets, of course, and do have an appeal for some in this current environment.
I'm a big fan of the Bitcoin and the whole and distributed ledger, and it's the technology that underpins it is fantastic. To claim, however, that it's a long-term store of value after only been in existence for 5 years, gold has 5,000 years of track record to validate the claim that we're a store of value is early. There are parallels between those two assets, if you like. I don't think they compete with each other. I don't think that the sort of buyer that buys gold and the buyer that buys Bitcoin are the same community, but the motivations underpinning it, which is an asset that nobody can control, that cannot be printed at will, particularly when it comes to Bitcoin and gold. It cannot be inflated away, for example, unlike cash. So they resonate with each other. And actually, the reality is that they're best off working together rather than in competition. Where Bitcoin, I think, and gold are in competition is, I think, gold very much requires the oxygen of publicity, of being spoken about, for it to do well. And there's no question with Bitcoin's meteoric price performance, journalists, people like yourself, will tend to talk about Bitcoin, and that detracts from gold's appeal simply because we don't get talked about. We really are a minority sport. You know, we're less than 0.5% of global assets under management. We need to be talked about as a market to be popular, to the upside and downside. So Bitcoin's in competition for eyeballs, essentially.
Just before we leave you, just a quick word, if we can, on what's happening with the price of silver. We've seen the gold to silver ratio expand out to almost, I think, 120, unprecedented levels of divergence between these two. I know if you go back in history, 20 or 30 times was what it was a few centuries ago. And I think I'm right in saying that in the last 30 or 40 years, the average is about 60, 65. So anything above 100 is, as I said, pretty unprecedented. What's your thought on the price of silver, and especially when looking at it compared to the price of gold?
Well, if you like gold, then you must adore silver. I mean, currently the ratio on my screen is showing 113. Interestingly enough, in the ground, in terms of the relative scarcity of those two metals, it's about 14 to 1. One that's 1-4, which is actually the price ratio of gold to silver coins in Roman times. It adhered to the natural rarity of the respective metals. But you're right to say that the more recent ratio has been 45 to 1. Currently, we're more than double that. So it suggests to me that gold is outperforming silver, probably because people are more nervous and they regard it more as a monetary asset. Silver has got industrial applications, so perhaps it's being held back. At 100 to 1, silver looked like an absolute steal. The reason, I think, it's got more to do with the community that's behind this market move. You know, the Americans in particular are silver bugs. They really love it. Think Bunker Hunt when he cornered the market. Well, this recent drive that we've seen in precious metals has not been American-centric. It's rather more European-centric and the West, and indeed Asian-centric. It's the Americans who tend to get right behind silver and drive it to record highs. We haven't seen that. And I think perhaps with record COVID deaths and cases being reported in America, as we've seen in the last day or so, you might well start to see that American silver investor coming back into play. And already, as I say, the ratios come down from 120 to 113, confirming that shift.
Okay. Well, look, Ross, it's a pleasure. Thanks indeed for joining us there from metalsdaily.com. That's Ross Norman.